Okay, ये कहाँ डाल दिया? Good evening, friends. I am K.K. Gupta, your host. Greeting from the Association of Financial Advisors of India. This is a company incorporated under the Company Act 2013 under Section 8 as a non-profit organization. It is promoted by the eminent financial experts and industry leader of India. More than 250 members enrolled till date today. Joint hand for exchange of knowledge and experiences for the benefit and betterment of all stakeholders. Association also pledged to standardize the working culture to rebuild the funding architectures so as to bring the discipline and ethical practice for all the stakeholders of the industry, namely members, lenders, borrowers, regulators, etc. As per international financial market, the key roles in the market for syndication of the loans are done by, you can say, book runners, mandate lead manager, we'll say MLA, and lead manager, lead arranger, and participants. In view of this, during this financial year, from the January, we have done one webinar, role of the financial advisor in the growth of the SME sector. It was very successful webinars where we have got a feedback that such webinars should also be held in day to day. That's why we have decided as associations that we should do why financial advisors are important for the growth of financial industry of India. India is today one of the most vibrant global economics on the back of robust banking and insurance sector. The relaxation of foreign investment rule has received a positive response from the insurance sector, with many companies announcing plan to increase their stake in joint ventures with the Indian companies. Over the coming quarter, there could be a series of joint ventures deal between the global insurance giants and local players. The growth of financial sector in India at present is nearly 8.5% per annum. This indicates the consistency or inherent robustness of the sector despite facing challenges, time due to pandemic and other factors. In this context of the above scenario, we propose to have a discussions session of the potential and way forward to the financial sector and how significant is the role of financial advisor can play in this respect. The mission of this webinar is to highlight the reasons and why the financial advisor are backbone for the growth of the financial industry in India and how they can contribute in building balanced financial ecosystem, discuss the key area, potential solutions and advancement, and showcase the noteworthy point to be adapted by the financial advisors. The conference, this webinar, will also provide a platform to the industry experts, policymakers, consultants, and experienced professionals to share their experience and guide. We are having a prominent speaker with us, Shri H.S. Upendra Kamath. He was the ex-chairman and managing director Vijay Bank. We have eminent personality, Shri Amarjit Chopra, who is well known in the financial industry. He was past president of Institutes of Chartered Accountant of India and having 46-year experience. I will come back to you details when I will ask him to speak. Mr. Dinkar Sanpal is General Manager, Bank of Maharashtra. He is heading the treasury and he is also well speaker in various forms. So he was with the Resurgent India so many times in other webinars. So under Resurgent India banner, we conducted about 110 webinars under a different subject. So we're also going to talk to him. Mr. Rakesh Garg, proprietor Rakesh Garg and associate is also with us, who have more than 3 decade experience as a chartered accountant. So this is a eminent panel which we are going to discuss the various aspects of the financial advisors and what is the role of the financial advisors and how they can play an important role with the regulator compliance and how whether we can see that something can be done for the benefit of SME or a lender or a small parties in respect of the restructure proposals in other aspect and how to decrease the NPA level. This is also one of the aspect whether the financial advisors can help the industry in reducing the NPA level and have a proper monitoring. So I am not take much time. I am requesting Shri Kamath sir. First of all, I am asking respected Shri H.S. Upendra Kamath, former chairman and managing director, Vijay Bank, joined Union Bank of India as a provisionary officer in the November 1973. Rose to the position of GM in 2006. Was appointed ED of Canara Bank in March 2009. Elevated as CMD of Vijay Bank in April 11, which position was held till 31st December 2013. Mr. Kamath was also MD and CEO, Tamil Nadu Mercantile Bank Limited for nearly 3 years. He is a BCom and CIIB. He is a recipient of many award courses, of which 43-year-long banking career was in some committee of IBA on RBI. I think you will love to listen to him. What is about his experience? Kamal sir, I am asking you, what way professional financial advisor can help the business entity? How they can be helpful to them? Because a business person is required to project something, have an estimate, have a projection, then have to execute it. So finance is playing a very important role. It is said that the money is the lifeline of the industry. Lifeline can be handled by the financial advisors. What are your views, sir, in this respect? How this a professional financial advisor can help to the industry, to the firm, or to the businessman? Kamath sir.
Thank you, Gupta ji. Thank you for having me on this webinar sponsored by AFAI. I'm also happy to be in the midst of luminaries such as Mr. Chopra, Mr. Garg, and fellow banker Mr. Dinkar. Well, with regard to your specific question, financial advisors are qualified professionals who provide consulting and finance advice to individuals as well as to business entities. When it comes to business entities, financial advisors can help them in more ways than one. Their engagement with the business entities can be either on project-wise basis or at an enterprise-wise level on an ongoing basis. Financial advisors, generally speaking, are experts in finance, project funding, and taxation, and matters like various other matters. Financial advisors, in my view, can help business entities in project identification, project feasibility and viability assessment studies, financial modeling, ensuring legitimately the bankability of a debt proposal, help entities in raising funds, be a part, with the business entities during the documentation period, the project, execution phase, and also the progress, monitoring phase as well. In short, financial advisors, undertake technical, financial, and legal advisory, services. In addition to what I have, just mentioned, financial advisors can also cover areas such as formulation of business and marketing strategies, capital raising, either from the stock exchanges, through the private equity sources, through private placements, preferential allotments, so on and so forth. Financial advisors play a very important role in capital raising. They can also help entities in identifying alternative sources of funding, whether it should be through INR or through foreign currency or through strategic investment, so on and so forth. They can also play an instrumental role in building a risk framework for the business entities, can also help in building a robust compliance culture in the organizations which they handhold. And lastly, they can also play a pivotal role in establishing corporate governance in organizations which they help. Financial advisors, in my view, can also help in assessing business entities, the current market trends based on their own individual research. They can also try and forecast what are going to be the likely disruptions in the near future, help business entities in evolving a change management strategy, help them in innovating, and also as a risk management tool in diversifying geographies, products, and services. Financial agents can also help guide the business entities in availing various benefits from the government schemes, whether it is that of the central government or the state government. Say, for example, the current PLI, which is the current flavor, schemes like ROTEP, so on and so forth. The financial advisors can also help business entities in planning and working towards minimizing the tax burden, staying at the same time fully compliant to the rules and norms in force. Now, all these areas, one single financial advisor may not have the expertise, domain knowledge to be of service to business entities. You will find very few of them having different branches that I have highlighted. Say, for example, the big four, to quote as an example. Others may have expertise, domain knowledge in selected few areas. Therefore, business entities have to decide whether engagement of the financial advisor has to be on a composite basis or on a selected few areas. That said, the business ultimately has to be run by the entrepreneur himself, right, because it is best left to him. He is the man who knows the business in and out. The financial advisors, after all, can only help, handhold, and guide the business entities and the entrepreneurs in various areas that I have tried to highlight. This would be my personal view. This is as a banker's perspective.
That's why I've started from you, because you have a hell of an affair in the industry, financial sector. You are the expert in that. Like my suggestion is what you are talking about, the marketability and giving a projection and taking a loan from bank. Whether sir, it is possible regarding the reduction in the cost, because the reduction in the cost is the most important issue, and the profitability in any organizations. If any financial advisor can be helpful to them to reduce the cost and the profitability.
Yeah, Guptaji, according to me, it is a combined effort of the entrepreneur and the financial advisor together. Okay. The entrepreneur knows where it pinches him. As we say, the wearer of the shoe knows where it pinches. And therefore, it has got to be a very collaborative effort, both on the part of the entrepreneur and the financial advisor. There are a few areas from a banker's perspective I would like to, highlight. Business, as we all know, is financed out of equity, debt, and market credit. These are the three major sources of funding, business. And therefore, and out of these, debt forms an important, component, depending upon what is your debt equity, ratio. And therefore, interest component is one of the major, item of expenditure, and therefore it needs to be, kept under, check. Financial advisor, can help a business entity in this endeavor of reducing the interest cost by guiding the entrepreneur whether he can, convert Indian currency borrowing into foreign currency borrowing, depending upon, the foreign currency interest rate, the forward premium, so on and so forth. Another way of, reducing interest burden is to try and convert wherever possible fund-based limits into non-fund-based limits, either in the form of letters of credit or, bank guarantees. This is another method of, trying to, reduce cost. Equity, as we say, is the highest or the most costly, source of funding. It is not the dividend cost alone. The investor in equity also expects capital appreciation. So in that sense, it has got its own cost attendant to it. It is time that our business entities move from debt-driven funding to bank debt-driven funding to alternative sources like, bond market, look at the PEs, private equity, players, strategic investors, so on and so forth. This is point number one. Point number two is, we need to look at the components of our own current assets. The main two items being stock and sundry debtors. Both of them, if it is held beyond the optimal level, there is an invisible holding cost. We all tend to hold, our entrepreneurs tend to hold, large inventory, much more than what is, required. It has got a cost. Similarly, if your sundry debtors realization mechanism is, slow process, then also it leads to an liquidity, issue, additional borrowing, additional interest costs, so on and so forth. Financial advisors, in my humble opinion, should, look at these two components of, current assets, revise the inventory holding policy. If a particular raw material is available in plenty, there is no need to hold, beyond what I call as safety inventory. One must follow the process of, just in time, inventory, so that your shelves don't, go empty. Now, this is one area where, in my humble view, the inventory management, comes into focus. Second is the sundry debtors. Now, sundry debtors, market absorbs as much credit as you extend. The moot point is, what is the optimal level of credit that one must, extend to the buyers? Second is, how much exposure an entrepreneur should take on individual buyers based on his past track record. Because sundry debtors means credit exposure, credit risk. Therefore, there is a case for looking at sundry debtors, minimizing the credit period if the entrepreneur extends more than what is required, convert them into cash, improve the liquidity, and use that liquidity for better, higher yielding, areas. In these things, I think financial advisors should look at the possibility of guiding the entrepreneurs for resorting to either channel financing, factoring, invoice-based, discounting, cash management product, and replacing the check payment by, online payment. These are various methods in which both liquidity can be improved, cost can be reduced, profitability can be improved. One our entrepreneurs in the Indian context, if I'm sorry to say this, have a tendency to go into non-core areas, build assets in non-core, areas. I have come across many of the mid-sized, companies, withdrawing money from business, investing in real estate, so on and so forth. Even in business itself, there could be non-productive, non-core, assets. They eat up your capital. Therefore, a financial advisor should look at these areas, help the entities in exiting out of this by selling them to the extent possible without upsetting your production and sales, targets. Generate liquidity, redeploy that additional, liquidity elsewhere. The fourth area, according to me, is there is a subsidiarization culture today. We open several subsidiaries. It happens in banks also. We are no exception to this. So there are wholly owned subsidiaries. There are joint ventures. There are associates, and each one of them will eat away a part of your capital. All of them simultaneously may not be giving you the desired returns, and therefore it is a drain not only on capital but also on your overall profitability at the enterprise level. So over a period of time, financial advisors should look at these kind of investments, identify non profit generating ventures, look at their long-term feasibility, profitability, and decide on those ventures from which you should exit. This will not only save capital but also improve your liquidity, which can be profitably used. We have a flair for going in for long-term borrowings to fund our fixed assets. So term loans are not the only way to fund the acquisition of fixed assets. At some stage in a industry's life, it is time we look at alternative sources. Some in-house endeavors like building up of amortization funds, sinking funds, either to replace or acquire new assets, or going through the DPGL route, etc. Should be explored, which can also have a beneficial impact on overall cost and cost reduction. HR cost is one of the very important major costs, whether it is in banks or whether it is in industries or whether it is in employee intensive enterprise. How do we reduce HR cost? It is time all of us move from fixed pay to fixed and variable pay kind of a thing. Hive off a portion of your pay into ESOPs, manage your terminal benefit liabilities in a very innovative way. Prefer instead of in-house funds, outside funds, give funds to manage, to insurance companies to manage, opt for the NPS route, so on and so forth. HR cost is something which is a perennial source of expenditure, and therefore we need to be very live to this issue. Wherever possible, financial advisors can also guide and counsel entrepreneurs if they have excessive fixed assets. Can we think in terms of sale and lease back model, so that the capital block can also be released? These are some of the thoughts that came to my mind with regard to cost reduction and improving the overall profitability. Guptaji, back to you.
Thank you, sir. Thank you, sir. I think, sir, within a summarized position of 50 years of experience in the banking sector, you put to the participants. Whatever you are talking about, I think it is a very, very important issue, sir. As you talk about the alternative funds, as you're talking about the instead of term loan, talking about the core current assets, core assets, which is useful for the any firm should be siphoned off. And maintaining the current assets, you are also talking about the carry cost for the inventory. I think this is also most important, cash management and HR cost, what you're talking about, sir. I think you're, I know word to express our gratitude, sir. Chopra sir was giving a big clap while you're listening.
Absolutely, no doubt
So
about that.
really, sir, your experience, I think, giving education to our participants, sir. Now I coming to respected Shri Chopra, sir. Shri Amarjit Chopra is a senior partner with GSA and associate LLP Chartered Accountant, New Delhi. He was president of the Institute of Chartered Accountant of India during 2010-11 and vice president the year before. He was chairman of National Advisory Committee on Accounting Standard by the central government for 4 years till 30 September 18. He has recently been nominated by Government of India as member of the National Financial Reporting Authority and also group constituted by Government of India to make suggestions, consultation paper or the professions. He has been nominated by the central government on the bench 11 of disciplinary committee of ICAI for the period of 4 years, 2018 to 2022. He also nominated by central government as chairman of the committee of reverse companies auditor reports dated 2016. He was nominated by central government on a standing committee for discriminalizing of the Company Act 2011. Mr. Chopra has a vast experience. He has been conferred honorary membership of the Institute of Chartered Accountants Australia and New Zealand, an honorary life member of the Association of International Account London. A profile speaker, he has delivered more than 2,950 lectures on various topics, including accounting and standard, banking, including financial inclusion, insurance, corporate law, corporate governance, ethical standard, peer review, both India as well as abroad. He has been included on the roster of IMF as a resource person and have conducted million of what I can read it. If I go on reading his biodata, I think 1 hour will be left. I think I am really, sir, thankful to you, sir. You are guiding factor for me at least. I consider you my model of my life, philosopher and guide also, sir. I have no word to express our gratitude from the Resurgent India side, from the Association of the Financial Advisor for sparing your valuable time, sir. So just I am asking you, Chopra, sir, because you know the restructuring scheme has been closed by 31st December. And it is envisaged that NPA level is going to increase for the SME or other sector also. It is said that even for, you can say, stress assets is around 16 or 17% increase. If you're talking about the NPA level, it is going to increase by 10%. It is industry figures what I'm talking about. So whether, what is your suggestion? Because you are a member of all the government organizations, whether it is not feasible for the government to extend this scheme or further some period, because 4 times they have given this scheme, 2 times previously, 2 times recently after 20. So what are your suggestions, sir, for that? Something can be done because you are the fellow affair of scheme.
Thank you very much.
Sir.
Thank you very much, Gupta ji. Thanks first for the opportunity. And thanks again for providing an opportunity to really being in the company of people like Kamas Saab and Dinkar Saab and Rakesh ji. And whatever I've heard from Mr. Kamath, actually, I can say it has been one of the very interesting and one of the very, very knowledgeable deliberations for that particular matter. So far as your question is concerned, let me come around. You see, Indian banking industry today, and I will like to stand corrected if at all I'm wrong. The biggest problem of the banking industry today is the NPA management, if you really ask me.
Yes.
We have seen at present level, we have almost 8 lakh crore rupees of NPAs, which are identified. Right. And 8 lakh crore rupees worth NPAs have been written off in the last 3 to 4 years. That has been the position.
Right.
And to me, most important is 11 lakh crore worth loans of agricultural sector. We don't even bother about that whether these are NPAs or not, and we all know what is happening. At the end of the year, as on 31st March, an entry is passed for the cash received, cash paid. That's absolutely a blatant fact, which we all must acknowledge. And besides this, the discom companies are also besetted with almost 7 lakh crore rupees of loans. And discoms are not faring no better, if you really ask me.
Right, sir.
Educational loans have already gone the other way around. Due to COVID, MSMEs have actually gone in a very different direction. MSMEs were already facing a lot of challenge. Now they have gone into a different direction altogether. And to top it all, what has happened is because of the scheme of the government, because of the guarantee scheme of the government, the banks extended top-up loans to the MSMEs to the extent of about 3 lakh crore rupees, if I'm not mistaken. That was the guarantee given by government. Right. That you can give the top-up loans to the extent of 3 lakh crore rupees and no questions will be asked. So which means the government guaranteed loans have gone up. There's no doubt about it. So in the balance sheet, you will have government guaranteed loans. But if these loans go bad, what is the remedy available to the bankers except for the government guarantee, the central government guarantee, which means at least the liquidity will not be coming in. And recently, what we have seen is a classical example in the case of Punjab and Sindh Bank. I'm naming the bank for that matter, wherein the government actually infused the capital in form of the interest-free bonds for that matter. Now, you really ask me the question because Dinkarji is dealing with the treasury. If you have invested in interest-free bonds, whether these bonds should be impaired or should not be impaired, we are not impairing these bonds primarily for the reason that these have been issued by the central government. If these were given by someone else, these bonds itself would have been impaired for that matter. And this is the topic of discussion at IMF level, believe me today, that wherever the governments are issuing bonds at a rate lower than the cost of the capital, whether those bonds need to be impaired or not, in any case. I'm not getting into that particular debate, but the moot point that I'm trying to make out is the government will have no choice. RBI will have no choice because you cannot keep on increasing your NPA level and being reflected in a very poor manner in the banking community abroad. You will have to restructure the loans. There is absolutely no doubt about it. There used to be a period before Mr. Raghuram Rajan actually undertook the quality review of the assets. Before that, we know what was happening, that you could actually evergreen the loans. It was asset quality review which actually reflected the true position of the loans in the banking industry. The only regret that I have is that asset quality review came at the wrong time and the economy was on the decline rather than being on the upward. If it had been taken at the right time, probably the impact of the NPAs would not have been that much. And the other problem with the banks today is with regard to the NPAs, with the arrest of one of the stalwarts of the banking in the recent times and other arrests also of the bankers which have taken place, a banker feels, why should I actually enter into credit? Why should I extend the credit to someone if this is going to be my fate? Even the genuine business failure, if at all it is to be attributed to a banker that you have acted negligently, I don't think that should be the practice. So to my mind, restructuring is going to be the order of the day. You just cannot wish it away under any circumstances. You will have to extend the schemes of the restructuring in the times to come. There's no doubt about it. The only thing that I will like to caution is that one will say that, okay, at least a particular unit should be viable in a period of next 7 years or next 5 years. If not next 5 years, at least in the next 7 years. And at least it should be capable of generating the cash in the next 3 years. If it continues to incur the cash losses even in the next 3 years, where is the question of its viability? Yes. And I think that is where the role of the financial advisors will be very, very crucial, if you really ask me. And it is here that the financial advisors, when they prepare the scheme for the restructuring, should be realistic. And what I expect of any financial advisor, whether I am actually talking in respect of an insurance agent, I'm talking of a valuer, I'm talking of a merchant banker, I'm talking of a chartered accountant, I'm talking of a consultant, I'm talking of anyone in the financial advisory capacity, I personally feel one has to be ethical. And particularly when I come to the evaluations, particularly for the purpose of the restructuring, when I come to the preparing the technical and financial feasibility studies, I think the things where we have gone wrong in the past has been over ambitious targets which have been stated in all these reports and have been accepted somewhere or the other. I think we need to be very clear. If a particular unit is non-viable, it is non-viable. Let it die out today, rather than it dying out after 3 days or 4 days when the banks have overcommitted their funds to that also. Why a good money should be chasing the bad money? Right. I don't think that's the right approach under any circumstances. So my humble appeal to everyone is, and rather my humble submission is that restructuring has to be done because of the COVID. If the businesses have not been functioning, the demand has been curtailed because of certain reasons, and the government, despite having said that 20 lakh crore rupees is the you can say the your aid which has been given, or
stimulus,
the incentives have been by way of this, whether this came in the form of the money or only in the form of the release of cash by the Reserve Bank of India to the various banks. I think that's very important. And whether it is that cash is still lying with the banks or it has gone by way of a credit, and whether it has been able to augment the supplies and whether the demand has been augmented, I think these are very important factors which need to be understood. Till the time the demand will be created, there will be money in the hands of the individuals. I don't think the things are going to improve in any case, and the restructuring will have to continue.
Very nice, sir. I think no word to express our gratitude, sir. You have covered very clearly. Sir, Dinkar sir, you want to say something on this subject? Dinkar sir, you want to say something? I had Chopra sir raised the point of bond because you are
Yeah.
treasury. So he asked
Yeah,
you want to say something, sir?
Yeah, the Chopra sir raised the point was very right. If the bond invested by the bank, if it is zero interest carrying, then what treatment shall be given? So that is the questionable, and lot of implications are there.
Sure.
But yes, going ahead, though it is a regulatory call, the financial advisor role is that if it is milking cow, then definitely it should be pushed up to the bank. If income generation is not there and such type of proposals or the investments come to the bank, then it will be difficult for the banks also to assess the proposals. And going ahead for the restructure, yes, definitely. It is required wherever there is a ill health. If you are looking ahead, yes, after some time it will be definitely get recovered. Then definitely that role of the financial advisor is also important to present it accordingly and create the confidence between the borrower and lender. Right. So it will give some faith in the system.
Very nice, sir. Sir, Chopra sir, I am coming to you. Can a financial advisor contribute in reforming the existing policies and regulation of finance sector? Because this is an important issue, sir. Because regulation is something, whether, because you are contributing. Why I'm asking this question to you, you have contributed a lot for the regulation amendment or something like that. So what do you feel, sir? Because these financial advisors, whether how it can be contributed, sir?
No, definitely. I think financial advisors will always be able to contribute to two purposes. Number one, sir, if at all there are certain policies which require to undergo a change, let those policies undergo a change for that matter. And I'll come back to a few of those. Sir. And secondly, if the financial advisors are very, very important tools basically in creation of the financial stability in the country, if you ask me.
Yes, sir. Yes.
If we come up with the right proposals to the banks, I'm using the word we. When I talk of we, it means we financial advisors.
Right.
Come up with the correct and right proposals to the banks. In that particular case, the financial stability itself gets ensured. If I prepare a right kind of a balance sheet, if I create a right kind of a profit and loss account, if I create right type of the notes to account, if there are proper valuations for that matter, if there are proper kind of credit ratings, in that case, the financial stability is assured. You look at an insurance agent going to an individual, he creates financial stability of the individual. He assesses his all needs as to what is his age, what is the age of his children, when his children will grow, when they will require the money for the education, and how that education has to be funded, at what particular point of time he is going to require the home, what kind of insurance policies he should be having. I think all this creates financial stability in the country. Unfortunately, what has happened in the past few years has been the credit rating agencies have gone berserk, if you ask me. You think of the credit rating agencies, you give them the highest category today to one of the companies. And the moment a fraud is unearthed, you say, no, we downgraded. That kind of credit agency, that kind of financial advisor is not desirable at all under any circumstances. I think we have been talking to the government that you need to regulate the credit rating agencies. Why not? You need to regulate the valuers also. And that is how the IBBI has come in. We never had the IBBI earlier. Now the IBBI has come in, basically. You look at even the insolvency and bankruptcy proceedings. Now there is some code of conduct which is coming even for the lenders, committee of creditors.
Yes, sir.
From whose advice it is coming? It is coming from the advice of the financial advisors also at the end of the day, or the experience of the government. So whatever the financial advisors feel is going wrong somewhere, they can definitely go. I can tell you one instance. In the latest changes in the auditor's report, how it has happened. Some of the financial advisors have gone to the government and said that the current assets depiction by the managements of the various companies is untrue. Whatever they file with the banks and whatever they are showing is absolutely different. So now in the company's auditor report order, but before that, in the schedule 3, the balance sheet which will be prepared, the balance sheet which will be prepared, the management will have to declare wherever the loan exceeds 5 crore rupees, particularly of working capital, that whatever stock statements have been filed with the banks, these are in agreement with the books of accounts. Whatever debtor statements have been filed, these are as per the books of accounts. Whatever creditor statements have been filed, these are as per books of accounts. And the auditor will have to report it in the CARO itself.
Oh,
that all these things are correct. Now there are 11 ratios which will have to be given by the management in the balance sheet, and those 11 ratios will have to be commented upon by the auditors. The financial advisors have gone to the government and said we need it, because there should be some kind, and that will provide financial stability to the system. So I think the financial advisors can definitely add to the changes in the policies of the government with various matters for that matter. I think Rakesh ji is there. Rakesh ji will be able to tell us how much policies have undergone a change with the SEBI for that matter with regard to the merchant bankers. These have undergone. I think SEBI changes its regulations every quarter, somewhere or the other, or maybe every day. And how does it happen? It happens because of the experience and the advice of the various financial advisors. So I think financial advisors need to do this. It is a sense of the entire function of the financial advisors that if they feel that there is some kind of a loophole which can endanger the financial stability of the organization or institutions or the corporates, etc., they must go in for a change of the policy.
Very nice, sir. Very, sir. Sir, what are you feeling is the improvement of financial stability, what you are talking about? Financial advisor play a very important role. Sir, one question.
Very, very important.
Sir, a very important role. Sir, question is coming in my mind. this Tandon-Chore committee was introduced in 76 or 75. Same CMA data are still applicable after a year or 40 years. At the time when I was in the bank, so I was also associated with them to draft some report or something like that under Tandon committee. So, sir, what do you feel that the CMA data after a period of 40 years or 650 years still in force? So, whether it is a proper assessment of working capital limits are there?
No,
Or you suggest?
I have a very different view.
Yes, sir.
I have a very different view.
That's why I'm
Gupta ji.
asking you, sir. That's
And
why
I think Dinkar is there and Kamasab are there. Kamasab is there.
sir.
I want to know that if the current ratio is 1.33 or 1, to me, it does not make much of the difference, very frankly.
Sir.
Because what is important is that suppose the current ratio is 3, but the cash generation is nil.
Note there.
Your inventories are getting built up.
Yes. Cash
Your
generation
inventories are getting built up. Your debtors are getting built up, and as a consequence of that, your current ratio is going up and up.
Right.
But the liquidity is not there because
Not
the
there.
debtors are getting built up. What kind of a current ratio we are talking of?
Sir,
I think we need to analyze the current ratio very significantly. Yes, if the current ratio goes below 1, that is a danger sign. Let me be very clear. Even when we go out for branch audit or central statutory audit, in all the cases, if the current ratio is working out to say 0.75 or 0.8, we definitely make out that there is a liquidity crisis so far as this particular organization is concerned. There is no doubt about it. But if it is 1.1 or 1.33, I don't mind so much till the time the other analysis of the balance sheet is absolutely fine.
Sir.
Very, very frankly. But yes, the operation in the account is very important. If the debtors are not being realized, and as a consequence of that, everything is going up. I have seen in many companies, work in progress keeps on getting built up and built up. No, work in progress getting built up is a very dangerous sign. In one of the cases, without naming that particular case, I can tell you when that particular limit was assessed, at that particular point of time, the work in progress had to be about for 1 month. And at the end of the period, when we realized and when we looked at the balance sheet as the auditors, the work in progress was as high as 12 months. How that account can be performing? There's no way that account could have been performing. So I think at times one has to look at many other aspects. And my only danger is, my only point is that at the time of renewal of the accounts, whenever we keep on revising the holding of these current assets from 1 month to 2 months to 4 months to 6 months, simply to ensure that the DP keeps on being on the right side of it,
yes.
I think that is the danger. So somewhere or the other, we need to play safe in this particular area.
Sir, for an audit, what I feel, Chopra sir, you change the even structure also, because I know when I have GM in Delhi, so you ask me, give me the monthly statement out of order position. From there, you are calculating whether account is going to be NPA or not NPA. I think fixing in my mind, I think not a central auditor ever checked about the monthly stock statement or monthly, you can say, statement, out order position statement, where we are telling M1, M2. I think you are the only person who find out so many accounts going to be
Gupta-ji, now the audit has undergone a tremendous change, if you ask me. Now everything is going to be through the technology.
Yes,
and
sir.
I can tell you now the extraction of data is far easier than what it used to be the other way.
Yeah,
today the extraction of data is much easier.
Sir. Dilkar sir, you want to say some comment on this cash flow funding? What we are asking Chopra sir, so he was very much clear. When cash flow is not there, still we are enhancing the limit, and go on current assets is increasing and limit is increasing, but there is no cash flow.
No, the Chopra sir rightly pointed out the liquidity, the current asset, current liability should not go beyond 1:1, because if it is below 1, then definitely it will be some liquidity issues. But it is above 1.1 or 1.33, it is not an issue. You can manage with the having surplus liquidity with you. So managing liquidity, yes, you can manage it. But if your health is not good, if it is deteriorated, it's in this some situation, it will indicate in the liquidity ratio.
The point is that whether the cash flow management should be there to assess the working capital limit instead of going for the current assets and now you can say other current liabilities and taking up some margin of 25% of that and assessing the limit, permissible limit, you can say. Whether that formula should be changed. What are you feeling as a financial
No,
advisor?
sir, it should be industry wise. It should be the nature of the industry, and also it should be the geographical area also. Sometimes in some geographical area, it will be some challenges are there or some separate mechanism are there. So it should be industry specific. Within industry also, you can give them some separate set of working for that.
I agree with you. Just like sugar industry, they are having a cash flow statement instead of going this method. Otherwise, they cannot assess the limit under the sugar industry. They are coming under the cash management system. I think industry depending upon that.
Yeah, I think Kamath sir want to add something.
Sir, Kamath sir, what do you say?
And just to add on to what Chopra sir, said, many a times, I have also come across balance sheets. When you calculate the ratios, current ratio in particular is, wonderful, much above, 1.33, somewhere bordering around 2, etc. Rare, but sometimes, we do come across these things. Then, it is too good to believe. And therefore, we need to be cautious as to whether this is a true reflection of the, actual state of affairs. I have also come across accounts where, despite the current ratio being, extremely good in terms of our financial, assessment, a check of 5,000 rupees doesn't get passed in the account. It is because precisely what Chopra Saab said. You have inflated, current assets, inventory, sundry debtors, level, without looking at as to whether these stocks are slow-moving debt stocks, or on the debtors front, what is the age-wise analysis of the debtors, why the debtors realization is getting delayed. So therefore, these are the finer aspects which the lender has to look at. Mere current ratio has some limited application, some limited guidance it gives to the lender, but the critical analysis of the inventory holding, the sundry debtors portfolio, etc., is the the most required thing. Then one more point with regard to cash flow based lending. That's the reference that you made, Guptaji. Perhaps ours is the only country where we still continue the asset backed working capital lending methodology. Most of the other countries, it is purely cash flow based lending, where the lender assesses the cash inflows, cash outflows on a very realistic basis. There also people can play foul, assess the cash flows, cash outflows realistically, ascertain the cash gaps, and fund only the cash gaps. I think it is time lenders think in terms of moving from asset-backed lending to cash flow-backed, lending, where the lending becomes, more liberal. The opportunities for people to fudge the, numbers gets minimized. It cannot be eliminated altogether. This is bound to be there in certain, pockets. Ultimately, business entities are nothing but reflection of, our own society. There is a small element of, black sheep everywhere. So it is time, organizations like, yours, the institutes and, others push, in my humble opinion, cash flow based lending and start gradually moving away from, asset backed lending. This is what I wanted to supplement.
Thank you very much, sir, for your suggestion. I think that is everything. Sir Chopra sir, this is Bharat Bhushan Shukla. He telling, Shri Chopra sir, a true picture shown by you. Salute, sir. I also salute from the beginning, sir. Everybody saluting you, sir. So, sorry, Chopra sir, I will come back to you. I am coming to Shri Rakesh Garg, proprietor Rakesh Garg and Associate. Garg sir, you are there? Garg sir? Garg sir?
Yes, switched off the video.
Garg sir? You are there now.
He was there. He switched off the.
He was there, but I think he has switched off.
Chaliye. So I will come back to Mr. now, Sri Dinkar sir. Dinkar ji, Dinkar is General Manager, Bank of Maharashtra. Dinkar has a career experience of 19 years covering two banks, Canara Bank and Bank of Maharashtra. While he joined the large corporate branch and circle office in Canara Bank, he has been with Bank of Maharashtra for the last 18 years. He has headed 3 out of top 10 branches of the Bank of Maharashtra, and he has also experience of heading 3 zones covering 8 states. Presently, he is located head office of Bank of Maharashtra as the vertical head of General Manager, Digital Banking and Treasury. His qualification include Master of Foreign Trade, PG, DVA in Finance and PG Diploma in Financial Advisory from IIGF. He has also attended distinguished training program and related certification, including IIDRV Hyderabad and IBM Pune and IM during his career. I think he is the right person to talk about. Sir, Dilkar sir, just I am asking you, as a banker, to well feel that the financials, the benefit of financial advisor can bring in bank for a grow with the help of innovative product and solutions. This is first issue. Whether the financial advisor can be helpful to the bank in their growth. Because as Chopra sir had told, because the banking sector, if the proper proposal was put up to the bank, if proper assessment was made, then this NPA problem can be solved to some extent. So what are your views, sir, in that respect?
Before proceeding, I want to correct. I think the profile what you received was not correct. I completed 33 years in bank, right? And I work in one in zonal manager at Aurangabad, and I work in the many times treasury. I work in international division. I work in risk management department also. So going ahead, your question regarding the benefits of the financial advisor can bring in for a bank to grow with the help of the innovative product and the solution. Yes, financial advisors not only enjoy the unique position with regard to their clientele, on other hand, they advise some of the wealthiest to optimize their returns, but also they advise high net worth clientele to optimize a way to secure their funds. At the both ends of the spectrum, like banks, which are creating to its depositors as well as borrower, banks being intermediate to the both sides eliminates trust deficit between the two categories by imparting the risk onto itself. Today, Indian banks offer more product than ever before. For example, the introduction of the cash management services by banks has helped the customers to earn more for their liquid funds lying in their current accounts. We have seen that in the pandemic also, or in the demonetization period also, there was a lot of liquidity was there into the system. Financial advisors can provide inputs to banks to develop product in along lines of the requirement of customer. Thus, bridge the deficit in bank service offering. With its investment banking services, banks have provided avenues to the customer to invest in securities such as debt, equity market in India. Financial advisors can utilize these services for their customers' investment requirements, thereby helping into the generate an additional stream of revenue for banks. In FDI, that is foreign direct investment, and ODI is another area where the nature of the transaction are subject to high scrutiny under various provisions of the law. The financial advisor can bridge the gaps between the clients and banks to smoothen the transaction. Financial advisors are well versed in the law of the land, and they are also constantly gauging the requirements of the customer. Bank products are essence quite same as they were in the past. Everything around it has evolved to match the requirement of the time. As such, it is assumed that the feedback from the financial advisor can be of a great importance for designing of the new product. In conclusion, banks and financial advisors can work in close quarters to foster a more productive relationship of mutual benefits.
Thank you very much, sir. Lekin, you tell me one point, sir, just like a fintech company, you are in a IT sector. I think they are working closely with the banker sector to improve the digital banking or something like that. What do you suggest, sir, for fintech company? Because you are also heading sometime, I think, IT sector.
So, in fintech companies, they normally they procure the data, whatever the customer is feeding into that, and they as recently after the account aggregator system, they get all the information, financial information of the customer. From that, they are assessed through some system software. They are analyzing their eligibility, their trustworthiness, and these fintech company can provide end-to-end solution for the customer. Because what happened now, they are creating now just platform. But if you get all the end-to-end solution, like additional information of the banks, which banks, what product they have, whether if any bank is providing two installment, you paid the total amount of your total length of the tenor, then there will be exemption of the 2 EMI. So ultimately, if the fintech company can provide the user the benefit, what benefit they are getting, because the product of the every bank is different. So ultimately, what is the gain and what is the opportunity loss for the customer? If they provide it, then I think it will be better for the user.
Very nice, very nice. Sir, one question is there from Mr. Pradeep. Sometime for a new organization, bank hesitate for lending against 100% security also. Something is letting for a new, it is very difficult. Even he giving 100% collateral. You want to say something on that subject?
Yeah, no, see, I think the Kamath sir already explained about this, because 100% security is not an issue. Either the cash inflow and outflow, if it is matching, then bank can consider your proposal positively.
I think this is a proper reply. I think is Chopra sir.
No, I think it is easy to say 100% security. 100% security, you are talking in terms of a building or something or machinery, etc. Bank is not in the business of selling the property or selling the machinery. Let's be very clear about it.
Liability should be there.
Bank is in the business of lending and recovering the money.
Yes.
and recovering the money through the operations. No, the bank does not want to risk. If suppose the entrepreneur is totally inexperienced, you may say that you are giving 100% collateral, but the bank says, yeah, I will be able to lend it to someone who is more experienced so far as this particular trade is concerned. Or you operate your account with me for some time, and after that I will fund you. So I think security is not the only ground based upon which the loan can be granted or it can be rejected. There can be other grounds basically based upon which these things happen. That is why you seek the experience, the creditworthiness of the promoters themselves. That's very important. If they are experienced themselves and if they have their credibility, if they have the creditworthiness, you may still fund even if there are lesser securities. I think Kamath Saab and Dinkar Saab would agree with me. I have been one of the opponents to that particular idea. If you ask me, sitting on the bank boards, people, everyone was craving for it that you just do away with the personal guarantee of the promoters. And recently we have done away with the personal guarantee of all the promoters, virtually, if you ask me, all the top borrowers. And that is where the problem lies today. If you have the personal guarantee of the promoter, I think you still have a chance to enforce certain lien against his property. If you have given up his personal guarantee, then what kind of a possibility you have actually to enforce any lien? So all these things are absolutely different. I think security is only one of the criteria to lend.
Yeah, true.
After all, there are unsecured loans also. We get telephone calls from different banks that to the professionals we are willing to give unsecured loans. The NBFCs are also giving unsecured loans, depending upon other factors. I think that's very important.
I think
and your project is, if your project is able to generate the cash, then only it will be appropriate. If you are offering your security, collateral security 100%, 200%, but your project is not able to generate the cash, then it is not worth to consider it.
Thank you, sir.
And the valuation itself is an issue.
Now I'm coming to Rakesh Garg, proprietor Rakesh Garg and Associate. Mr. Rakesh Garg is a qualified chartered accountant by profession and has over 3 decades of experience in financial services industry with extensive involvement in logistic and transport sector. He specializes in the mentioned fundraising, merger acquisitions, business development, business initiatives, corporate finance, investment banking, banking strategy, business planning, financial modeling, business valuation, feasibility report, project management, treasury roles, cash management, risk management, etc., etc. Over his tenure, he has worked on more than 80 large-scale corporate projects, excluding proprietary projects, where he has raised almost $150 million for this company on standalone basis. He is directly associated with 2 multi-billion dollar major fund beings, Infra Asia Development and New Quest Capital. I think he's the right person to talk. Sir Rakesh Garg sir, how can the financial expert redefine the future possibility toward the growth of the finance industry? Because you are the helm of fear of providing the loan and make a arranger or something like that. And more than 3 decades you have experience for that. How you feel that? Whether you can redefine future?
Now, adding to what Mr. Kamath has been saying, and the other people have told the role of the financial advisor, I would like to add that every financial advisor in turn gets some kind of domain expertise. For example, I help a lot of logistics companies, transportation companies. So within the industry, you start getting domain expertise. So that can be very helpful in trying to raise money, both in terms of debt as well as equity. Not only raising money, but compliances, and there are always certain government policies specific to every industry. So, a financial advisor role is very important there. So basically government makes policies trying to take the industry to a particular level. For example, in logistics, they want more direct port delivery so that the time is reduced between the time the material comes into the port and it gets delivered ultimately. There is an index. So the government keeps trying to bring down the index so that the logistics cost per ton or per kg of material that we consume comes down. So all these norms are set by the industry, and the role of financial advisor is how to bring down those costs, bring down those levels so that in the world, those indexes, we are able to achieve those benefits. So invest in businesses where those goals can be achieved. Invest in businesses where those costs can be reduced. That is where the financial advisor role comes in. Okay, so one thing is there that there could be domain expertise with the financial advisor, which he can help in not only defining where the business should be run, or out of the various tracks of the business, which business you should invest in so that you can get better benefits. Then there is a big role of alternate sources of funds. You know, we are always used to traditional term loans, CC limits and all from banks and all that. But now a lot of companies have come up, new age companies have come up, which give you alternate ways of raising money. So what has happened is there are companies which are now come into bulk buying. Like if you want steel, so there are companies which have been set up who, you know, buy material in bulk. So the advantage you get is you get the advantage of price, because instead of each individual buying X amount, they have collectively, spoken to manufacturers and got hold of, materials. So because of the fact that they are able to buy in bulk, they are able to give you better price. Plus, because they are become the intermediaries, so they will give you material on credit, whereas they buy by paying upfront. So these are companies, new age companies, which have come up and which will help you in reducing your cost, both for procurement as well as the carrying cost, because ultimately they are going to, do business for you. So the role of financial advisor is to look at all these alternate source of funding where, you can reduce the cost. So what happens is or if you are borrowing, for example, if you are supplied some material and there is a debt, and there are specially made platforms where those bills can be discounted and at a very low rate, because the risk is you're supplying to government and all that, so the risk is less. And banks also have started participating in those platforms and are discounting those bills at a very reasonable rates. So all those avenues, and not only debt, but you can also look at funding by way of equity or private equity or mezzanine funding, where you are not only getting investment in form of a convertible bond or a convertible coupon, where you are giving certain kind of a benchmark rate, but it can get converted into equity as you progress. So all those options is something which the financial advisor, because of his experience, can help you in that. So and also help you in a lot of restructuring. And as you were telling me about mergers and acquisitions, sometimes certain businesses, because of their inherent cash requirement and all that, are better run by a person who has deeper pockets. So at some stage, it is better to partner with somebody or.
सर आपकी वॉइस चली गई है लगता है.
Sorry.
आ गया सर. Please, hi sir.
Let's come back.
Okay.
Let's come
Okay.
Come back.
So basically, I was talking of alternate sources of funding, and also the fact that how the costs can be brought down by having a look at the market and what are the alternate source of funding that are available in the market other than the traditional whatever loans and CC limits you can get. And the other aspect which I was telling was about the fact that if a advisor has a domain expertise, he can guide people to do businesses according to the verticals or according to the broad guidelines of the country or the government in that particular field. For example, I was telling you logistics, we want to bring down the logistics cost and the time period between the time when a person brings the material into the country and it goes for ultimate consumption. So there are parameters and indexes. So if you can invest in businesses which brings down those costs and bring down those time periods, then you can definitely benefit out of that. So that is where the financial advisor can play a role in defining how the future is for the country.
Sir, Garg sir, you are also doing logistic and what you are merger acquisitions.
Yeah.
Whether you feel that the tech, because you are expert for a financial aspects. What about technical aspects, sir? So how it can be matched with that? Because without technically, if you are not knowing anything, so how you can be justified yourself?
No, see, as I told you, my first statement was that over a period of time, you start getting domain experience. For example, in my case, I started helping logistics companies. So from one company to the other and all that. So over a period of time, like I started in 93, 94, helping out logistics companies. So in another 10 or 15 years, most of the companies I got associated with. So you are able to develop the domain knowledge once you are catering to a particular field. So, domain knowledge can be obtained over a period of time. It's not necessary that a chartered accountant only has financial knowledge and, the domain knowledge of the industry. I'm quite sure if the thing is very highly technical, then obviously, a person cannot get into those details, but there are experts available for that.
Okay, sir. Very nicely, sir, you have covered. So, sir, Dinkar, sir, one question is there. Because what he writing valuer, on value he writing that they are under pressure to give a valuation report from the banker. If they are not coming up to their expectation, they will be depaneled. How you feel, sir? Whether such pressure tactics was there?
No,
He
no.
had Prashant
In fact, the valuer or legal opinion, the legal impelled, the lawyer, they are professionals. And everybody is free to use the ethical things in their profession.
I agree.
If anybody is pressurizing you,
Yes.
then why you are doing it?
Right.
Means you are not doing the ethical things.
Right.
Because ultimately, if you give the false valuation, then if account goes bad, then ultimately, after the due process, you will be in a blacklist. So what you earn? You lost your image. You lost your integrity into this from the system.
Right.
So do the ethical business, because bank, what is the bank? Bank is depend upon the transparency, trust, faithfulness. If trust is not there, faithfulness is not there, then asking just the value, there is some pressure from somebody to give more valuation. I think it is not good idea.
Very nicely, sir, you covered. So, lastly, sir, Dinkar, sir, you have any suggestion for the financial advisor? What now you're talking about ethical or something like that? What as a banker, what you feel that why monitoring? Because banks are appointed some monitor to monitor the account, and there is some competitions because one is quoted about 5 lakh rupees, another is 50,000 rupees, and one of the cases I filed the 5,000 rupees and they are taking it. This is unethical practice is not there. So how you feel that it should be rectified? Dinkar sir, then I will think I'm coming to Chopra sir.
Yeah.
You say something, sir, for that? You're talking about ethicals. So ethicals is something different. Because 5 lakhs rupees you will not give, and L1 is there for 5,000 rupees you will give. And how is justified about that things? I see so many cases for the monitoring purpose. I think Chopra ji want to say something. Sir, Chopra.
Yeah. Because of that,
I only want to say one thing, that I think it is here that the bankers will have to make up their mind as to what needs to be done.
Yes, sir.
When they hire lawyers, they don't go in for tenders. Let me be very clear. If they have to seek a legal opinion, they never go in for tenders. Whenever they have to go for monitoring of a particular account, they go in for tendering. And tendering has its own adverse impacts, basically. We all know what can happen in tendering.
Right, sir.
So whenever you have to allot a forensic audit even, you go in for tendering. Why tendering for forensic audit? After all, you should be able to determine your own cost. After all, if you require a chartered accountant for 30 days, even in the case of a concurrent audit, even if he's a fresh chartered accountant and if he's to work for 25 days, you do expect a cost of 50,000 plus a staff member cost. And if you are willing to pay him about 20,000 rupees, how do you expect him to be ethical? Let's be very clear about it.
Yeah, this
You
is a
see,
point.
unfortunately, certain practices which have developed in the banking over a period of time have actually created malpractices. And I personally feel somewhere or the other in monitoring, because if you don't pay him, he will have his own way of actually getting the money from here or there. I don't want to get into the things for that matter. The forensic audits are ineffective only because of that reason. Believe me, forensic audits which used to be costing 15 lakh rupees or 20 lakh rupees, if somebody is willing to tender at 75,000 rupees, how he can actually render a job? There is no way that he can render that particular job. After all, there is going to be a minimum cost with regard to a chartered accountant or two chartered accountants or three chartered accountants. Somewhere or the other, I think this is one issue the institute has been taking up with the various authorities, IB also. But everyone says, no, I will like to go with the lowest L1. If he's also the same chartered accountant, he's also the same chartered accountant, but then he's the same advocate also. Why do you take an opinion at a much higher price compared to a lower price? After all, the two lawyers are the same. The two lawyers are the same. You never go in for tendering so far as the opinion is concerned. But you go in for tendering for forensic audit, you go in for tendering for the asset monitoring. Somewhere or the other, we are actually all responsible. When I say we, it includes you, it includes me, it includes everybody. We are all responsible for messing up some kind of a system.
Agreed, sir. Agreed. I think, sir, your view is very, very excellent, sir. I think, Dilkar sir, you want to say something?
Since I want to say on this, I want to comment. But since my senior, Kamath sir is there, he is well experienced and he has worked as the MD and CEO level. So I request Kamath sir, if possible, your word will be give some comfort, because I definitely I can give the deliberate of this.
Very nice. Now it comes.
Dinakar has passed on the responsibility to me.
No, sir. I can comment. But since you have heard the top of the organization,
Dinakar in a lighter vein.
Better idea about it.
Dinakar in a lighter vein. Don't take it otherwise.
Thank you, sir.
Yeah. See, as Chopraji rightly mentioned, the situation that is confronting us today is because of a combination of reasons. Partly the outsourced agencies are to blame, partly somehow our internal to the bank systems and procedures also need to be blamed. But I would not generalize these things. Whether it comes to the empanelment of advocates, whether it comes to empanelment of valuers, it is only an empanelment. It is only an empanelment. It is not an entrustment of work. Entrustment of work, whether it is for legal scrutiny or for valuation, depends upon various factors. And there is an internal system within the banks that there has got to be an equitable distribution of work amongst the valuers and the empaneled lawyers. With regard to valuers, we also do take care. If one person values the property today, next after 3 years when we value, we don't choose him again. We change the value. These are all built-in, systems and procedures to minimize, foul play. Unfortunately, with regard to tendering, where the cost involved is high, Chopra Sahab, the system that is prevailing in the bank, which is a result of various guidelines, from the CVC, from other regulators, even from the, government, etc. Banks have a system of, calling for tenders originally intended for a right price discovery. The example of forensic audit that Chopra Saab quoted, that the reasonable time, energy and remuneration required if it is 20 lakhs per assignment, if somebody quotes only 75,000 or a lakh of rupees, and we based on L1 entrust it to him, knowing fully well that output is not going to be of any great utility to us, because that man can never undertake a very reasonable, accurate, work. Now, I would say the person who quotes also is to be blamed, because he is also equally responsible. No, he wanted to get that work, under his belt. He has quoted, so low. So it is a combination of, the mistakes on various parts. Difficult to pinpoint and blame anybody, but collectively, collaboratively, both the banks, the regulators, and advisory bodies like ours, who is sponsoring the webinar today, we must all work together for improving the systems and procedure, rather than indulging in fault finding. Whatever has gone wrong in the past, it is all because of a combination of reasons. Some of them may lie at the doorstep of the bank. Some of them may lie at the doorstep of others. Our success depends upon how do we minimize, if not fully eliminate, these risk factors. Ultimately, change is what is constant. We need to keep changing. We need to keep improving, and we all learn out of our past mistakes. So long as the mistakes are not costly, improvement can continue to happen. I would only put it that way, without indulging in any fault finding exercise.
Sir, you are.
It was definitely not a fault
You
finding
covered everything.
exercise,
Sir, my last submission
used the word
concluding. Sir, Chopra sir.
No, I said it was not a fault finding.
No,
I used
not
the
at all.
word we. I
Understood.
The word we all
Understood,
have
understood.
collectively.
I am
That's what
only making a general comment. I am only making a general comment.
Thank you, sir.
Sir, when things go wrong, unfortunately, in the Indian context, without trying to understand how can we recover the money from the person who has, caused that loss to the lenders, whether it is bank, NBFCs, or whoever else. Our first endeavor is to, pinpoint mistakes, fix accountability. Chopra Saab referred to credit averseness in the beginning of your, address. It is because of this. We are in the business of lending. Credit default is an inherent risk in, lending. We take thousands and thousands of decisions day in and day out. If all our decisions were to be right, we are not human beings. We are like God, which we are not. And therefore, as very judicious, bankers, lenders, we need to be strictly compliant with the systems and procedures, so that the, risks, could be minimized. Losses could be, brought down. That's the only, game. We have to lend. Lending is our, dharma. I have said this, in earlier seminars also. Lending is the dharma of the, banker. Recovery is his karma.
क्या बात है सर. Very. Sir, actually, for concluding remarks, I am asking Kamal sir from you. What do you want to suggest our members? Because about 250 members are there in this association. Further, they are increasing like anything. And I think more than 500, 600 people must be listening you. So if you have any advice for the financial advisors, sir? You're talking of financial advisor, include everybody. Even you're talking about the valuer, you're talking about the insurance agent, we are talking about everything. Who is advising the banker or something? That is a financial advisor. So, have any your advice to them?
I will take a cue from what Chopra Saab, mentioned in the beginning of his address. He said, as financial advisors, we also have a duty to be very realistic in what we project. And if we take proposals which are indeed very, very bankable, all of us can together ensure stability in banking and in turns overall financial stability in the country. Now, keeping this in the back of our mind, an organization like ours, Association of Financial Advisors or Institute of Financial Advisors, the least we can do are 3-4 things. Again, as a banker, perspective, kindly try and lay down, the ground rules and standard operating procedures to the extent possible for the functioning of the financial advisors, to the extent that it can be, laid down. This is number one. Number two, again, taking a cue from what Chopra Saab said, maybe it's a good idea to formulate a code of conduct and code of ethics for financial advisors. I am not referring only to financial, advisors, the whole encompassing, lot. The third thing is probably whether our association or our institution can become a self-regulatory organization, SRO, as we call. We ourselves say these are the yardsticks and stick to those, yardsticks in our day-to-day functioning. Last but not the least, I saw one comment in the chat box also. Today, knowledge is power. And therefore, education is at the center of, everything. Can we as an association, can we as an institution representing the financial advisors educate all those who render advice and all those to the extent possible who receive the advice? So that, this educational endeavor, if you can, roll out, it can stand in good stead both to the financial advisors, as well as to the users. This is what, strikes to my mind as a banker.
Very nicely.
Probably these things could be attempted over a period of time.
Nicely, right. Now,
over a period of time.
Our Major Mr. Chopra sir. Chopra sir, you can give some advice, sir. You are such an experienced.
No, sir. I will only end up on one line. Sir. Let's all be ethical. Let the financial industry be ethical. I think that's very important. Whether I as a financial advisor who is getting into the projects or some valuers or some opinion makers, whosoever is there, if we are ethical, I think we'll lend stability to the entire system. And I think the things will go in the right direction. I think that's very, very important. And that's the key, basically. Nothing else is more important, very, very frankly, whether these are bankers or these are chartered accountants, these are company secretaries, these are cost accountants, these are any person with any kind of qualification, MBAs who are into the financial intermediaries, basically. I think we all need to be ethical. And there's not even a single exception to this. If one pillar of this goes wrong somewhere or pillar falls, I think the other pillars are also likely to collapse. That's I would say.
Very nice, sir. Very nice. Sir, Rakesh sir, Garg sir, you want to say something?
What they have, Mr. Kamath and Mr. Chopra has, told us that ethics is very important in any profession. And I think the way we conduct ourselves will create the impression of the financial advisors. So if in the association we can have our own internal checks and balances brought into place, so then over a period of time, the respect for the institution will increase. And I'm quite sure this would be very helpful.
Thank you very much. Thank you. Dinkar sir.
Yeah. The gaps between the services and any solutions to fulfill the gaps is more required now, because whatever failure in financial failure we have seen earlier, some failures will be there, but the repetition should not be there. For that, some suggestion should be adopted and it should be implemented. So that is my suggestion.
Very nice, very nice. At the end, in concluding remarks, I can thankful to our Bishop Pitama, Mr. Kamath. Kamath sir, you are a great.
No, no, please,
Actually,
please.
you what actually when you are coming to any webinar, I think lot of people demand for you. They are telling is Kamath साहब को बुलाइए, Kamath साहब
No,
को
no.
बुलाइए. Sir, you have a really such a banking experience and a practical experience, sir. We have no word to express. This association really obliged for your sparing your valuable time, sir. We are thankful to you. And Chopra, sir, now I think every participants were telling your free, frank opinion. So for you also, what I can say, sir, you are my philosopher and guide also. Always I following your steps because once you have a central auditor and you check my zone, so I learn so many things from you. I'm really obliged, sir, for your sparing your valuable time, sir.
The pleasure is mine, and I am equally grateful.
Thank you, full sir. Rakesh, sir, really, with a short notice, you agreed to address us. And with your experience, I feel that participant must be enriched. And for coming other webinar, we will try that you are also invited. And Chopra ji and Kamal sir. दिनकर साहब को तो मैं कुछ कहना ही नहीं है इनको तो जब कहो इज रेडी तो लास्ट मैं तो समझता हूँ मेरा लास्ट गोल है चलो गिले का हाँ मैं नो नहीं करना मुझे कभी रियली ऑलवेज ही इज ऑब्लाइज्ड मी टुडे टॉपिक वाज लाइक दैट इट इज नॉट फिटिंग इन द बैंकिंग सेक्टर तो लेकिन स्टिल you are greatly accepted that you will be there and you will give your opinion fair effectively. Dinkar sir, I am no word to express my gratitude, sir. Lastly, I am also thankful to Resurgent team who organized this webinar very nicely and by uh, feedback, Mr. Rohan and other his associates. So I'm thankful to them. Above all, I am thankful to the participants, especially who always oblige us, who always give us a proper feedback how we can improve our webinar. Because under the Resurgent banner, so we had done about 110 webinars till date, and all are successful webinars. Beside that, for PhD Chamber, SOCHAM, CIA, Indian Chamber of Commerce, we are also somewhere knowledge partner, and we are also doing some webinars under the Resurgent India banners. The Resurgent India is a growing company, having a merchant banker. We are debt syndication. We are doing a technical viability study also. And in solvency, we are also there. Now, recently, we started valuation also. So, we also approve valuer also. That type of services we are giving. We are also drafting the project reports, other thing, TV study we are conducting. So, lastly, I'm thankful to all my panelists, all my participants, and all my team members. I close the session with these words. Thank you very much, sir. Thank you, everyone.
Yes.
Thank you.
Thank you, sir. Thank you.
Chopra Saab, Garg Saab, and Dinakar ji, great, pleasure knowing you. Gupta ji, of course, I know him for a long time.
Sir.
Great to be
सर
associated with you.
आपको जो कुछ कह रहे हैं मैं देते कामत साहब यार सब्जेक्ट क्या है तेरा ये बैंकिंग तो नहीं है मैं बैंकिंग नहीं सर आपको आना है थैंक यू सर
Thanks a lot, sir.
आप
Thanks a
really
lot.
obliged, sir.
Having known you,
Thank you.
it's a
Thank you very much, sir. Thank you.
Thanks.
Really obliged, sir. Thank you.